Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 16th. Hope you guys had a nice long weekend here and some exciting football over the weekend here. Hey, we got just one economic news release scheduled for today, and that is the Empire State Index for the month of January. So this is manufacturing in the New York region. So last reporting back in December it was 18 on the index, with forecast for January was supposed to go upwards to 19, and it had a slight dip to 17.7. So not a huge change here, but again, we'll just kind of have to see a couple of these in a row, see if it becomes a trend or not. But for the most part, decent number here out of New York. Let's kind of jump ahead here to the headline news. Stock market is up. Dow, wow, it's just what can you say? It just hit the 26,000 mark. Again, breaking another record, that 1,000 mark increments in the fastest time here. So that 24 to 25,000 was fastest. Now that broke it again and to hit the 26,000 mark here. It's just on fuego here. It's just they're taking its cues today from earnings reports, Q4 earnings reports, where companies seem to be blowing it out of the water right now. They're optimistic for coming ahead with the tax cuts and business-friendly policies that things are just really taking off now. Now the big thing will be is will inflation be coming a cue? Now we got a couple of things that could potentially go up there. We're starting to see wages kind of creep up a little bit. That could help push that up as well. Dollar is kind of weakening a little bit here, and the dollar weakening is even though we could get more our exports outwards, but the cost of goods coming inwards could help kind of creep up a little bit in terms of cost of good, items going up as well. So that could help with inflation and bring up inflation. So again, this will be interesting to see for future reference, or if how much, if and how much inflation might go up. If it might just take off like crazy, or if it's just going to keep in control. And that's going to be important because the Fed's already kind of announced that they're the thought process of this year that there'll be three rate hikes, and potentially if it comes in a little hotter, expect more rate hikes for the year. So let's go ahead and take a look here at the bond market, see what's going on with the interest rates. Excuse me about that. We're up so far. Here's where we left off on Friday, and then right now we're up about 13 basis points, which is good enough for improvement in our interest rates today, which is obviously good news for those who are interest rates. Here's the, excuse me, sorry about that, Treasury. So here's the Treasury. It's down about 1 point. It's down to about 2.54 range. And again, still kind of helping us out here. It's kind of in the middle range here, trading in the middle range here. Whereas here, we're kind of working our way upwards after taking a pretty big beating early last week here. So for the most part, again, good news. Rates are better today from where we left off last week. And we'll see if that trend continues or not. All right, so we do got a lot of data coming up this week, so be prepared for some volatility. But otherwise, we're wrapping up for the day. Hope you guys have a great rest of your day. But if you guys want to get more data, just come over to Twitter. I'm underneath my handle, Mike Bjork, on Twitter, and I'll post throughout the day there as well. All right, have a great one, and we'll look forward to see you guys tomorrow. Bye bye.